everybody. How we doing out there? We got Doc and Mav with you tonight. Ready, set, live for September 19th. How's everybody doing?
Hey guys.
Good evening, everybody. How we doing out there? If you can hear us and see us okay, let us know. Just give us a quick shout, little chat in there. Make sure that we are broadcasting out on the ether.
Not on ether, but you know.
Yeah, it's a ERC20, right?
Yeah.
So, okay. Hey, Tad, how are we doing? Am I pronouncing that right? Is that pronounced Tad? Hey, Matt, how we doing? All right. So let's see. We had some fireworks out there today. So let's go. Little Doc, big chart. There we go. Over to the charts. This is kind of the interesting thing that we saw today was, we're just kind of drifting along. In fact, Mav made the comment yesterday, this is an extraordinarily boring market. And all of a sudden, boom, out of nowhere comes.
It took offense to that.
Do we have an echo going again? There's no way. No, we're not broadcasting. The mic is clean. Yeah, that's weird. Is anybody else hearing an echo? We got Brandon is saying that we have an echo tonight. You got to put a buy-in order before the dump. Nice. Okay. So, the one thing I've been talking about lately, guys, is that we have, if we go out here to the daily chart, we have especially Bitcoin, we just have volatility is just continuing to come in. You can see this it's getting smaller and smaller and smaller and smaller. And, unlike dropping a baseball off of the Empire State Building, which was my analogy from tonight, eventually it's going to bounce and keep getting smaller bounces. But in markets, in financial markets, it doesn't work that way. Range contraction like this winds up potential energy. It's like you're cranking down a spring, and this eventually will lead to a pretty big release. Now, everybody wants to know which way this is going to go. You're going to read a lot of pundits talking about, it's a bear flag, bull flag, whatever patterns. And, honestly, we don't know. I can give you a better probability that the price is probably going to release to the downside. But again, we don't know. So have a plan B behind whatever you do. Have a plan A for if the price releases lower. Know what you want to do. Know if you want to step in and buy something. If the price goes higher, know what you want to do with that.
So, Doc, one question I've kind of seen, or something that I've seen talked about, is this notion of a double bottom or a triple bottom, or these multiple bottoms sort of predicate a market rebound. That's, the more bottoms we see, the higher the rebound's going to be. Is there any truth to that? What should we take away from the market now establishing multiple bottoms?
Okay. Funny you should mention that. Because, all right, so there's, there's a lot of different chart patterns out here. So hopefully you guys can see this, that there's the notion of a double bottom, and a double bottom is something where the price is coming from this direction, and it's better to have a slight undercut of the first bottom. And that's where people feel comfortable shorting the market, and there's too many weak hands in there, and then institutional bulls will jump in and push this thing higher, or whales, or whatever you want to call them. So that's a double bottom. I've seen double bottoms before, and they're fantastic. They will usually bounce from a period of absolute panic and fear. It's amazing to watch. I get goosebumps just thinking about it. Okay. You got to be a real market nerd to think that way. Now, sometimes you'll also see as much as a triple bottom. A good example of a triple bottom was actually, if you guys have all heard of the tech bubble that crashed in 2000. Well, that didn't eventually bottom until 2002, 2003. And that one actually featured a triple bottom before it just absolutely took off in 2003. So we had a triple bottom back there. I've studied chart patterns for the past 15 years, and I've never heard of anything beyond a triple bottom. Typically, when markets do something like a quadruple bottom or pentuple bottom or whatever you want to call it, something like that, usually it's going to lose it. And this is why, essentially we're talking about this is called a descending triangle pattern. So the most dominant pattern that we have right now in the market is the descending triangle pattern. This should release lower. It's not that I want it to release lower, but a descending triangle pattern has a higher probability of releasing lower. Now we're in this weird situation though, because it's like everywhere you look, we've got basically positive news. People are starting to make money in crypto. They're starting to bring in service revenue with crypto technologies. And it's just a matter. So we're almost in this boiling pot. So again, guys, the probability is that we should release lower. We should get that final capitulation for the bear. But I am not going to be surprised if we see this thing all of a sudden just take off one day and never look back. So there you go.
It is interesting to see how resilient that 6,000 line is. It's basically defined 2018 as Bitcoin's fight against, staying above it, keeping its head above water. So yeah, I think there is, I think the big takeaway is just, at this point, we're not counting on some sort of triple bottom. Anyone talking about that isn't really paying attention. It's more about what comes afterwards. And yeah, like Matt says, this is crypto and anything can happen. So it should be, Q4 could be kind of interesting.
Yeah, don't forget, guys, there's an awful lot of ego that gets involved with retail traders. Retail traders are always out there beating their chest. In today's social media world, it's even worse than before of, hey, look at this trade that I got. And people will only share their winners with you. They will not share their losers. They will not be open and transparent and share their losses or their failures with you. So you're going to get this sea of kind of like, hey, look at me, look at me, look at me kind of thing. And we don't buy into that kind of thing. Like as I always say, there is no medal for catching the bottom of this market. You can say, hey, look at this, I caught the very bottom. Said no one ever catches the exact bottom of the market. Nobody ever catches the exact top. No one sold exactly into 20,000 BTC. Well, somebody did, because somebody was still buying up in that area. But, don't worry about catching the bottom tick or the top tick or anything like that. All you care about is the meat that's in the middle of whatever the next trend is. So we'll have plenty of time. If this market pivots and starts to take off, we will start to see coins. I'm starting to see some bases set up on some of these coins out there. Like some of the ones that we're following in the swing trades, like ETP is still hanging in there. Dogecoin's setting up a nice base. The mighty Doge. Go figure. It used to be kind of a joke, but it's actually doing quite well now. And even the beat upon Ethereum is still showing some positive forms of life down here, even though it has not reversed trend yet. So do I think it's due to the hash rate of BTC that's giving it at above the 5,800 to 6,000? Do you think there's anything to that?
Yeah, so I'm on my phone right now trying to go back through a video script for a video I'm working on right now, which talks about that, sort of the notion of what gives Bitcoin value, what if we really break it down, what are some of the empirical ways we can look at where Bitcoin's network value comes from, otherwise known as Metcalfe's law. This notion of network utility is a function of n squared, or the number of people on the network. So the bigger the amount of people on it, the more value that a network has. And so there's also I'm trying to find it right now. I've got you guys should. It's my scripts are a mess. It's there's no way around it. I just kind of I compile as much information as I can.
He's making it up as he goes along.
Pretty much. Yeah. So let's see. There is, when talking about the value of the Bitcoin network, there's several things to consider. Metcalfe's law definitely relates to just the different ways that we can talk about the network effect itself. The positive effect described in economics and business. Yeah, there's a lot going on here. There's I did have like a paragraph about that talks about essentially one of the common defenses right now as to why Bitcoin has not really reached equilibrium, but isn't descending above around that 6,000 mark, is because that's about what it costs to mine a Bitcoin these days. So there is some arguments towards that. Obviously, there is a lot more going on, especially with a decentralized network such as Bitcoin and the blockchain as a whole. So I can't say that as definitively that is what is propagating or propping up the network, and rather its price right now. But it is definitely a factor. It is definitely, miners are the ones who are securing the network. As we've seen, the hash rate has improved or gone up, and I think that there's part of that is, miners are just constantly looking for what is sort of the most valuable network. And one thing to consider is that what is it, 2020 is the next block halving event. So leading up to that, I think there's going to be some more price volatility, and after that, you have
Yes.
what's that?
Yes.
Yeah, yeah.
I love volatility. I love things that move.
Yeah, yeah. We will have less rewards given out for miners. It's half. For block rewards. So it becomes more of a competitive race as Bitcoin's become more and more scarce. It is a deflationary currency, and one of the things I talked about in the most recent public video that talked about rehypothecation and commingling is that that's how they essentially take the finite number and sort of expand upon it. But at the end of the day, there's still only going to ever be 21 million. Some estimates are that 25% have already been lost, and taken into account like Satoshi's Bitcoins and things like that. So that percentage will only continue to increase. It's definitely going to outpace the number of coins that we mine per day, especially as we go through more and more of these block halving events. So yeah, there's a lot to consider. It's that's one of my favorite things about the sort of space is just how nebulous everything is. There's no, you can look at a company on the Dow or the S&P 500 and say like, well, the PE ratio is this, and so that equates to that's how we do equity analysis. We look at things that are related to the profitability of a company.
Yeah, I used to pay you to do my fundamental analysis because I hated it so much. Maybe that's where you got your start.
Yeah, something like that. I don't know. I think this mic is like making the. There we go. Okay, cool. Oh, geez. But see, that's the thing is.
Do not adjust your television.
Yeah, exactly. With cryptocurrencies, we have completely new, well, not new, but different ways to evaluate these things, and so it really is, I think, a microcosm of technology as a whole. Is how do you value something like Lyft and Uber, or how do you value something like those electric scooters that are everywhere now? It's like part of it is speculative value as it relates to the network value of. The more people we have using these things, the more not only can we, are they utilizing them, but we can also use that for data. I think that's one of the biggest pieces or takeaways or things that people miss in technology is that data is the new oil, and it's sort of the lifeblood of why Amazon is huge, and even like companies like Apple who they are very much a hardware company, but a lot of what they do as well is sort of the data.
Hey, we haven't talked to these guys since you went out to San Francisco.
Oh yeah.
So can you give them maybe your top 3 takeaways from Block World and Litecoin?
Yeah. So this one,
the Litecoin Summit.
The Litecoin Summit. I I met some of the Gemini guys there, and they announced that Litecoin was going on Gemini, so that was kind of cool to see in person. You always read about these announcements and stuff like that, but it's cool to see it in person. Definitely the best speakers, people I talked to. I really liked Elizabeth Stark, who's the CEO of the Lightning Network or Lightning Labs or whatever it is. She gave a really good talk. It was sort of relating to the upcoming role that Lightning Network and really just off-chain scaling as a whole is going to play in terms of blockchain and really decentralization as a whole. I think I talked about this last week as well, how sort of the internet itself was, it's TCP/IP hasn't changed in a long time. You can't change it because that is the network. So instead, we built upon it. And so the same thing is happening with blockchain. Is if you wanted to hard fork something like Bitcoin, that's a completely new network. But as it relates to Bitcoin itself, the Bitcoin network is going to be monolithic. It is not going to be changing. So we're going to build on top of it, and we can make some changes to the underlying technology, the underlying network, such as SegWit, which is a soft fork. But for hard fork type stuff, the big changes, I don't think we'll ever be able to do more than about 7 transactions per second for Bitcoin. But that's okay because we can do off-chain scaling solutions, build on top of it. And because Bitcoin is the biggest network out there, it just serves as the natural choice to build these sorts of solutions on. For example, if the U.S. government today wanted to release the dollar, aka stable coin that is pegged against the heuristic value of a dollar, they could do that on something like the Bitcoin network because it is the most propagated, it is the most secure, it is the most not decentralized, but there's definitely a lot of hashing power, the most hashing power involved with it. So this is sort of the fun part about where we are as the space right now, is like all these things I'm talking about are just kind of like hypotheticals and theoretical things, and really the natural course that we find ourselves on is one of these many different possibilities. So I hope that I'm not impressing upon you that there's it's definitively going to be this certain way. We're just so early in the space that there's so many different possibilities that it's really kind of exciting. And you can kind of see that when you go to these sorts of events. You can definitely get the impression that people are like, yeah, I don't really know where we're going to be in 5 or 10 years, but I think it's going to be exciting. And I think that's why I'm here. And so that's, if I want to give some of my takeaways, first off, just the importance of sort of where we are right now as a space in terms of just what we're working on right now, the technology. It's the most important thing, the scaling solutions, the different ways we're going about it, atomic swaps and that sort of thing, stable coins. All these things are very important to helping adoption and scalability and adaptability. And so that's really important. The other thing is definitely that you definitely get the impression that the people at these events are there because they care. It's sort of funny that the trend that we've gone through has been really painful, but it's also been extremely beneficial just for the longevity and legitimacy of the space, because the only people I meet at these events are the ones who really care, the ones who are really here to do things, to be invested in things, to build things.
I think we've already flushed out the pikers.
Yeah. So,
that's what a bear will do.
People only talk about, these days, BitConnect or stuff like that as sort of a bad memory, which is great because, that is sort of where we are right now, is we've been able to flush out a lot of that. And no, that will never go away. There will always be that fringe element, but I think it's less defining of the space. We went through Silk Road and all these other things, and that's just what we had to get through to get where we are. And it's not always going to be comfortable, and it's not going to be painless, but that's how you grow, is you go through these things and you become better. And so, nothing worth having is easy. So that's kind of where we are. And then I guess my last takeaway is just how cool it is to be able to talk to people about crypto. I like that is a really dumb thing. I don't know, but it's really cool to be able to just be in a room full of people who just totally get it, who just are there because they see it, they understand it, and not everyone can put it into words, and not everyone can phrase it the right way, or not everyone knows everything. That's the other cool thing is like there's no one singular expert. There's multiple opinions. There's multiple different things. No one can tell you exactly what every one of the top 100 do, and if they can, good for them. But it's sort of this sort of sense of like aggregate of like community. Like we're all part of something, even if we're all kind of doing our own thing.
Where is the next show you're going to be at?
So the next show is going to be in Vegas. I'm going to be at World CryptoCon. I just got $200 off tickets, or promo code. So I think that brings the price down from like, what is it, like $8.99 to $6.99. Yeah, it's still kind of expensive, but it's a 3-day conference. It's in Vegas. There's going to be, if you're in town, I don't know, it's going to be pretty fun. Another thing, I'm also going to be back in Vegas for NAC 3. I've got 3 free tickets for that, so we might do like a raffle or something. I don't know. We'll figure it out. But I'm going to be speaking at that one, so I'm really excited to be a part of that, because I think the guys for that one are really attentive to like trying to make it the best event they can. I think the guys at World CryptoCon want to make it the most flashy, and that's not pejorative. That it's not meant to. I think they want to be the next consensus, whereas like NAC 3 wants to focus a little bit more on like the developers and that sort of thing. So definitely there's pros and cons to both. But yeah, I'm going to be in Vegas in a couple times, and I'm going to take a break from traveling for a little bit. I'm a little bit tired doing it like every other week. So yeah, it's been fun. I know, right? Oh, geez, first world problems. But yeah, I think I want to get back to
when I was your age.
Okay, so yeah, I've talked a lot.
So Matt is asking, can you talk about which countries are crypto or blockchain friendly and what they are doing to advance the space? What comes to mind is Malta.
Oh yeah.
Malta comes to mind.
Well, there's definitely a spectrum, and everybody. I think that's one of the other cool things about crypto is that because it's worldwide, yet it's also defined by the sovereignty of the countries that it operates in. We have different laws and regulations, especially going forward. It's going to be a very interesting space. But yeah, I think Europe as a whole is sort of opening up to it. South Korea, Japan in its own way, Southeast Asia in general is really becoming a hub of blockchain innovation. The U.S. Is kind of on the fence. It's frustrating. Oh man, that camera is all over the place tonight. But I think in a couple of years it'll be for the best. And what I say to people is that we're going through the struggles now. We're going through this. The U.S. is doing what it does best, which is to grind stuff into dust and take as long as it takes. But thankfully, I don't think regulation will outpace innovation. I think they want to do it right. They see the importance of this, and they know that if they kneecap it, that the world will take advantage of it and go.
Well, yeah, the
faster
problem with the U.S. is that it's still considered a reserve currency around the world. And so if you're going to compete with it, they're going to say, okay, that's very interesting. Well, but I think people that are forward-looking are going to realize that it's going to happen no matter what.
Yeah.
You can only delay it. You cannot prevent it.
Yeah. So
let's see.
Yeah.
Miguel is, how important are asset-backed tokens to the crypto space?
Yeah. So I just came from I'm sort of like mentoring a cryptocurrency club at the university down the road. And that was tonight's topic was stable coins and sort of what does that mean and how is that going to expand. And so, with new coins like the Gemini dollar and like the MakerDAO DAI token.
That looks like that's a pretzel.
Yeah, I guess I don't.
That looks like a Hofbrau pretzel with beer cheese on it.
It has to do with something with their the twins, or I don't know. But yeah, I think it is important. I think there's the biggest problem with stablecoins and asset-backed tokens in general is just nobody has proved that it's a solvent model yet, and sort of like the collateralization of stuff as well is sort of really interesting to talk about, especially when something like the MakerDAO DAI token isn't just strictly backed by like fiat reserves. You can collateralize Ethereum, you can collateralize eventually like buildings and all this other stuff, your car. And so like we were having a discussion of like, what does a decentralized repo man look like? It's gonna be kind of interesting. So it's very I think it's necessary. I think it's part of the space going forward. Is it where it needs to be? Absolutely not. Is it going to take some time? Absolutely. But yeah, Brandon. I don't know. It's the Gemini pretzel. But yeah, I think there in time will be more options and we'll have more assurances in terms of just the solvency of these models. So yeah, it's definitely important, especially for adoption and just the implications of like you pay somebody and they receive through atomic swaps. You pay them in one coin, you get a US backed coin in reserve. I don't know, stuff like that. It's just gonna be kind of interesting. So that said, I have seen a lot of really bad coins that are trying to do this model and are sort of shady, like gold backed coins or something like that, and which is just tokenized gold, I guess. And I don't know, just I would definitely do your due diligence, and I would definitely just be careful. But yeah, I think that will continue to improve. So yeah, great question. Let's see. We had a couple other questions from Discord. Do we have time?
Oh yeah. Do you remember what they are?
Let's see. RRC. Oh yeah. So there was one question on the Discord about sort of like the exit strategy for when the market rebounds, and what should you be doing essentially in terms of like what should you be preparing for, and what's your strategy? Obviously if you're still in the game at this point, you're sort of hoping that things will rebound. But as I was talking about it at the end of yesterday's newsletter, is having a strategy for what are you going to do if you do, assuming you're in the red right now, what do you do if you break even, or what if it instead of 20,000 this time Bitcoin goes to 40,000? What do you do then? So I think those are the sorts of questions you need to be asking yourself. If you're going to be sort of this intelligent investor, is
Does anybody out there know what rule number 1 of risk management is? Rule number 1 of risk management. Does anybody know that? I hope so, but we'll see. Rule number 1 of risk management is never again place a position where you don't, before you place the position, you identify what your exit is. Mm-hmm. So think about that for a second. Think about how non-intuitive that is, but think about how sensible that is. That will save your bacon the next time that you get into one of these situations, because everybody gets involved in an investing situation like this and says, hey, let's put X amount into this specific coin. And they never for once think that it may actually go down instead of go up. I mean, otherwise they wouldn't have invested in it, right? And so all of a sudden, if it goes the opposite way, they're a deer in the headlights. They don't know what to do because they never factored that in. And then all of a sudden you get into all the biases. You get into the sunk cost effect. You get into confirmation bias. You get into loss aversion. You get into all those weird things that make the human being such a bad trader. And so you can really save yourself a lot of aggravation before you get into your next investment and identify what your exit is, both to the upside and to the downside, of course.
Brandon had a good guess, though, by
Defining position size. That's actually the second rule. That's the
number
gold.
2.
That's the golden rule of risk management, which is to risk no more than 2% on each position that you add. Not necessarily the position that you build up, but for every specific trade, risk no more than 2% on that. Those two things will keep you high and dry going forward.
Right.
Yeah, Binance is Brandon's talking about Binance and the BNB coin, and
I'm still proud of the fact that I was there day one, right as Binance lit up for the first time. I stayed up till like 5 a.m. in the morning, just to do it, because at the time it was going to be the most friendly Neo exchange. So I wanted to put my Neo on there temporarily, but to trade you had to buy BNB tokens, or at least you used to. And so I bought BNB tokens at 25 cents, and I forget what it is the last trading day, but it was something like $10 or something like that. So I've always been proud of that, being on Binance, which became the biggest exchange. So yeah, you're right though. The exchange token model has definitely taken off. Will it be the sort of killer thing going forward? Maybe. One of the things we were talking about at the meeting I just came out of as well was sort of this sense that it's not decentralization that this space right now that we're pursuing as a whole. It's not the sort of end goal right now. In the interim, what we're doing is looking to combine or hybridize. Hybridize, is that a word? Do
hybridine systems.
Hybridize the centralized and decentralized models into one, and that's the push towards decentralization. So that's why you see exchanges like Binance looking to open up their own decentralized exchange and sort of, eventually play the benefits of both centralized and decentralized. You've got the trading accessibility of centralized exchanges, and you've got the sort of asset ownership and security of decentralized exchanges or DEX. And being able to marry the two would be amazing. And finding a way to do that, I think, is sort of a push right now. And so that plus like shared liquidity among exchanges, and just, I don't know, there's a lot of other stuff going on. So yeah, there's definitely viability to exchange tokens and that sort of model. I think it will continue to do well. So especially Binance, they seem to have got it figured out. They just made an announcement today that they want to have an exchange on every continent, and I thought that was pretty cool. Except it's like, how are they going to do Antarctica? That should be interesting. But yeah, StellarX, yeah, absolutely. I'm excited for StellarX. I think that's another one that's going to do big things. So yeah,
Looks like you got a couple of beer buddies there in Las Vegas. We got George and Miguel.
Yeah, guys. Yeah, let me know, because I'll be there from October 31st to November 2nd for World CryptoCon. So it's gonna be kind of fun. Maybe too much fun, I won't say.
Hey guys, just a question for you guys out there. How are the trade schools? Are they working for you guys? Are they giving you the topics that you're looking for? If there's anything you're not seeing, or if you'd like to see us do differently, let us know. And we'll continue to put those out. Anything else? Any last questions? If not, we are going to say adieu. And appreciate you guys hanging out with us tonight.
Yeah, good session tonight. Thanks, guys.
So here we go.
Hit the button. See you guys.
Yeah, we'll see you guys later.
There goes a sight from my soul. There goes a sight. I